Welcome to Crowded Market Report by Jason Shapiro. If you want more from Jason, subscribe to Crowded Market Report and get access to the CMR community, weekly reports, charts, and other exclusive content. Learn more at www.crowdedmarketreport.com or click on the link in the right corner.
Hello, today is Saturday, November 18th, 2023. I'm Jason Shapiro with CrowdedMarketReport.com. Last weekend I got together with some friends and we had a poker game. And it was good because recently I did an interview with Annie Duke, who was a famous and successful poker player. And she mentioned to me that, and we were trying to put the similarities between trading and poker. She mentioned to me that the biggest mistake people make when playing poker is they play too many hands. And I've never particularly been a very good poker player, but I sat there and I observed the game as it was going on. And it was clear that the people at the poker table who played a lot of hands, slowly over the course of the game, their stack just kept getting smaller. And the people that sat back and waited and only played hands that were good or really good and waited for the fat pitch, so to speak, saw their stack go up over time. And I think the person that won the most money, we probably played for 4 hours, 5 hours. I would say the person, maybe it wasn't that long, 3 or 4 hours. The person that won the most money in that poker game I was in won 5 hands the entire time. And, paid the ante, won big, paid the ante, won big. And clearly, it also takes luck, because you can obviously feel that you have the best hand and somebody can pull something on the river miraculously and win. And that happens. But my point is, all this is just like trading. If you're overtrading, you're paying vig, right? I've talked about this so many times, but what you want to do is wait for the fat pitch, right? And then go. And you don't go with all your money. The great thing about trading, first of all, there is no vig if you're not trading. You're not losing anything. And markets will clearly go up and down and up and down. You'll say, oh, I could have been long there. I could have been short there. And that's fine. You know what I mean? You're not losing anything doing that. And that's sort of faulty learning because you see the ones where, oh, you could have been long there and you weren't. And oh, next time you're going to chase that. That's not the idea. You want to have a process that identifies fat pitch for you. Wait for it, and then take it. And again, it doesn't guarantee that somebody's not going to pull something on the river, right? So you don't want to risk everything on those trades, but those are the ones you want to make. And over time, you will get lucky, and those trades over time will slowly build your stack and be profitable, okay? It's the same exact thing. So, what I use, as people know, to find the fat pitches is mass positioning. People are super short. I think the fat pitch is to be long. I just want to give an example of this type of thing from my recent trading. I have not had very many trades recently. It's been a very, very quiet period because my process tells me that there's no fat pitches. And that is what it is. I watch the markets go up and down. I mean, would I have loved to catch, this recent move in the stock market ripping 10% higher and all that? Sure, but it wasn't on my radar as part of my process. So I didn't do it. Really, pretty much the only trade I've had, right, is one trade, which is very rare for me, right? But, where we got along in this, and look, I'm showing a trade that works, and I'm here to say all trades don't work. Got long this Swiss franc in the first week of October, and I've been sitting on it. And listen, it went in the money a lot right away. It pulled back quite a bit of it, 60 to 70% of it, and now it's kind of back on high, and that's all fine. But point being, this one trade, right, has made me 3% in my portfolio over 6 weeks. I'm a person that's looking to make 12 to 15% a year. 3% in 6 weeks is a big, nice return for me. It's a chunky thing. So just sitting back, folding, waiting for the fat pitch, going for it, taking the trade, knowing what the risk was, gives me, a good 20 to 25% of what I'm looking to make all year in just 6 weeks. So, just an example of what I mean by waiting and only playing the good hand. You, me, the person that you're paying his service to tell you what to trade because the last trade he made was great and you saw that, so you joined. None of us can predict the future, okay? Anybody who is not talking about getting into trades that pay off more than they lose when they're wrong is selling a bad service in my view. right? It's all about this risk reward idea and being disciplined to this risk reward idea and only getting into these things so that over time you can build your stack. Okay. That's what this game is. Nothing else. All right. So that's the thing that you need to focus on. That's really the main message. And I hope everybody has a profitable week. Please like this video if you don't mind. And if you like the ideas of what I'm talking about, you can join us on crowdedmarketreport.com. Okay, so have a nice week, and we'll talk again.
Subscribe to Crowded Market Report by Jason Shapiro.